I don't think anyone else is going to come.
No, we're ready.
Yeah.
Let's go.
Alright, is everyone ready to go? Alright. Cool. Alright, so welcome back everybody.
Welcome back.
First of all, this is Harrison. He's on a placement at GCA Altium. They're M&A, but we call them a boutique. Would you say they're a boutique? Yeah. They're a boutique firm based in London. He's here today to answer any questions you have. I'm sure he'll stick around at the end if you want to ask him any questions. He knows his stuff, and I'm sure he's going to try and make our lives a bit difficult with a few questions today. So yeah, that's just the overview. There's no point in me talking about that. So macro key movers. Obviously, we've not met in 2 months, so a lot's happened. So first thing, general election. What happened with that? UK general election.
Anyone?
Conservative majority.
Yeah, so Conservative majority was sort of bigger majority than everyone thought. Good for the UK stock market, everything went up. US Iran tensions, what happened there?
Assassination.
Yeah.
I almost forgot that.
Yeah.
And then retaliation by Iran.
Yeah. So obviously
it was
that
a lot less than what the market expected. So
yeah. So that was bad for our portfolio at the time, but it sort of recovered from then. The next
very
one,
quickly.
Yeah, coronavirus. It's not a beer.
Mass hysteria.
Yeah. Anyone else got anything to add about that?
Do you think, guys, this is going to get a lot worse, more towards the market than what could happen with, people, which should be serious, but do you think it's going to get a lot worse? The number of deaths or the number of cases with the virus?
The perception
Yes.
around the world definitely is, people are pretty scared, and it's very unstable now in China due to the situation. Whether it is actually that serious or not doesn't matter. It's public perception that's
Yeah.
most important.
Sorry, go on.
China's stock market prices dropped.
Yeah, massively, big drop.
Significantly. Actually, there is a question about that in
Yeah.
the quiz at the end.
Okay. And then also, the Bill Gates Foundation, they predicted that there'd be 45 million deaths from the coronavirus.
Really?
Yeah, which is quite a lot, obviously.
I'm not sure about that.
And then other people are predicting that the world stock markets will go down by 10%.
Right now.
Huh?
It's only 560 up to now, and I think with
Yeah.
time people are realizing that the mortality rate is just 4%.
Yeah.
So I think it shouldn't be that much of a problem, but
Yeah,
even
exactly.
with that number, I'm actually scared now.
Yeah. Sorry. I made that up.
But I read something today that today or tomorrow some kind of vaccine is going to start being trialed or something like that.
I think they've been working on it in the UK. if I'm not wrong.
Sorry to interrupt. I think they're working all across the world.
Yeah.
And also they're thinking that maybe in the next 8-12 months something will be discovered.
Yeah, and I think.
They weren't working on vaccines because they said that vaccines are going to take like 6 months or something, and that's a lot of time.
Yeah.
So that's what
I think they're already starting to all the UK hospitals are trying to put in a coronavirus area.
Yeah.
Yeah.
Harrison, what do people in your area think about it?
It's not my job to answer questions, it's my job to ask.
Okay. Trump's impeachment trial. Anyone want to expand on that? Yep.
Yeah, nothing really happened.
Yeah, basically, exactly that. Because obviously, I don't really know how the American political system works, but it's something like one side of them is Democrats or something, and then the House of something else is Republicans. So they were never really going to vote it down or something because they obviously not going to vote against their own bloke. So nothing's ever going to happen.
I'm going to give my opinion about that.
Okay.
And my opinion is that I think that the stock markets were going to carry on going up until the US elections. I wasn't very sure with this in between, but now that this has been kind of forgotten, I think the stock markets will be going up until the elections. And because of this, I think Trump is going to be the president for another 4 years, which in my opinion means that the markets, something good for the markets for the next 4.5 years.
'Cause I mean, ordinarily, the presidents do normally get voted back in again for a second term, like as history seems to suggest.
It really depends on how the caucus is now.
Yeah, exactly, obviously, but yeah. UK leaves the EU. When did that happen? Proper officially. So officially happened on the 31st of Jan. What's going to happen over the next year?
Transition.
Yeah. So obviously there's a lot of uncertainty around that, but Conservatives got a huge majority, so whatever they do decide to happen, it will just get voted through. There's not going to be all this like back and forth, like let's just get voted down, let's get voted down. Oh.
The mouse.
Yeah, a lot of uncertainty there. I mean, the thing is, like, although there's obviously we need to negotiate a trade deal with the EU, you've got to remember that the EU's got trade deals with loads of other countries as well. Like they've got trade deals with South Korea, wherever, like 70 countries or something. So we're gonna have to be in the same position. We need to negotiate trade deals with the EU and then all these other countries as well. And like they can take years to get sorted out.
Carry. Go ahead.
Also, they're going for this Canada's out deal, so that would mean that services are not going to be included, I think.
Oh, really?
So financial services might have a hard time.
Yeah, and I mean, some companies have started to buy like or start renting out offices in Paris or Frankfurt and that sort of thing, moving their operations out there.
Luxembourg.
Yeah, exactly.
And one thing to add, that the pound during this year will kind of fluctuate quite a lot because if there are news that in this transition period it's not enough time, which means that something bad could happen in between the EU and the UK, which could mean a lot for the pound.
Yeah.
So we will see plenty of fluctuations
Yeah, and like
this year.
currency fluctuations do affect us quite a lot. So as I probably mentioned before, our portfolios were measured in euros. So whatever happens to the euro affects us quite a lot. Okay, I was going to quickly whiz through financials update because hopefully you've been keeping up to date on what's been happening there. So
With your news and your famous
yes.
Facebook posts.
Goldman Sachs. So basically last week or the week before, famous investor day, the first ever investor day they've ever done, like sort of opening the doors to their company and their strategy and that sort of thing. So basically what they're trying to do is they're trying to sort of follow the JP Morgan model, like focus a bit more on the consumer side of the business. Going to have potentially like a joint venture type thing with Amazon, giving out small business loans. They've already got their credit card with Apple, which is potentially going to get rolled out further.
Have they done anything else?
Have they done anything else?
Goldman?
I mean, there's the 1MDB scandal still going on.
Anything else?
Didn't they revise something to do with markets? They have like a consumer banking system to do. I don't know, they call it markets. It's kind of
Yeah. So that's been brought into the UK now. I've got an account with them. It's pretty good. 1.5% interest rate.
Anything else?
I don't know, mate. You tell me. The CEO's a DJ.
He is.
I think they decided not to invest in companies that have no female.
Oh yeah,
board.
yeah. Read about that.
Anything else?
I don't know, Harrison. You tell me. I'm not sure what you're trying to get at here.
Huge division just opened up in Goldman.
Don't know. Tell us. Enlighten us.
We've started up a new specialist capital markets group and also a new M&A mid-market group, which unfortunately competes with us.
That's why you know it.
Predicted to have 1 to 2 billion TTV.
TTV, enlighten everyone what that means.
TTV is total transaction volume. So
Nice.
it's the amount of EV, so the amount of the deal's value. So if you sell a company for 100 million,
Yeah.
your fee will be a percent of that. But your total transaction volume is 100 million, and they're expected to do over $1 billion.
Yeah.
In that new mid-market.
Yeah. So basically they're just trying to copy JP Morgan a bit by breaking into consumer. Anyway, Chinese property market's still due to coronavirus. Spoken about that a bit already. HSBC, their full year results, 18th of Feb. We need to keep an eye out for that. Basically, they've not got a CEO at the minute. They've got an interim CEO. So they're holding off taking on a CEO permanently until they've released this like new strategy. And new strategy is going to be like loads of job cuts, cutting down the IB division a bit. Yes, we need to keep an eye on that. Could be a potential trading opportunity. Deutsche Bank shares, we shorted them last term, up 30% this year. A company called Capital Group just took a 3% stake in them, taking their stake up to, I think they're like the 6th largest shareholder in them now. So that led to a bit of a rally in Deutsche Bank, a bit more confidence there.
Why did you short DB?
We shorted DB because we shorted DB and Commerzbank.
It was about the
Ger-
German GDP
Yeah.
that was going to be released that week, that the guy thought that
Yeah.
it was going to be worse.
So one of our analysts, Nam, found like the GDP figures and the sentiment figures for Germany, thought they'd come below what they actually were, and then they did. So then Deutsche Bank and Commerzbank both fell.
Who's Russian one?
Yes. Thank you, Harrison.
Oh, I'm giving you a hard time today,
Okay, ETFs.
Matt,
Yes.
can I do first my thing and then you come to
Oh,
this?
yes.
Well, actually, why don't we show the portfolio?
Oh, yeah,
and
yeah.
then we go to to our new positions.
Yes. Okay, portfolio performance. It's been a rocky few months. Okay, 18th of December, we're at £90,000 up. So a lot of that was from like our Woodford Patient Capital Trust position, which, if you remember, I pitched that.
And the Deutsche Bank and Commerzbank.
Yeah, yeah.
As well.
So we made like 30k off Woodford. Virgin, we made 25k off from the general election. Lloyd's were, and we closed both of those. Lloyd's we were at 15k up, but we've kept that, which I can explain the reasons. Then sort of that fell a bit to £75,000 up, started jump because of Iran tensions. Then went back up to £90,000 up. Iran tensions eased. Last week we were only £20,000 up. That was when we met. Looked pretty.
70 grand.
Yeah,
difference.
a
When you
lot
have
of value lost.
When you have £2 million portfolio,
Yeah.
this move
But today-
sound a lot abnormal.
Yeah. Today we went up 38,000. So now this is our portfolio.
Show the platform right now because I think it is below.
Or is it less than that now?
125, Yeah.
Okay, so when I took that screenshot, oh, yeah, okay, it's a bit less than that. So yeah, 2,096,000. Okay, so here's our portfolio. As you can see, 1.963 million value. So
19 positions right now.
yeah, so we don't have that much left to invest if we want to, but there's a few things in here that if someone's got a good idea, I'm happy closing. Like for example, like the Ruffer investment company that I pitched to you.
Nah, I think we should.
Well, just certain things I don't mind about is like showing if someone's got a really good idea. I don't want us to feel like we can't open new positions because we've not got much capital left of that. Anyway, where's PowerPoint? Is it in here?
Yeah.
Okay. Did you want to talk about this, Bronzo?
So I don't know if some of you remember that I said something before Christmas that I was going to think about some insurance companies to add to our portfolios, like the one at the top, Arc Capital, which probably some of you remember. And the rationale behind that is I hope I have the pictures in here. It's pretty much the same as what I did with Arc Capital, and it's this. So you were asking today about what to do or how to find good trades. So okay, first I need to mention this quickly. I'm going to do it very quickly. Go to morningstar.co.uk, which is in my opinion, the best platform for investment funds. And this is kind of a bit of a cheating, but if you go here, not here, this one, if you go here to sector equity and financial services, so 100 investment funds that are investment only in banks and insurance companies. So you come here, you go to performance. I mean, this is kind of to have a good starting point. You click here to have the investment fund or funds with the highest return in the past 5 years. You choose this one, for example, Polar Capital, which is an asset manager. Then we go here at the bottom, we have Arc Capital, Marsh and McLennan chap Alkani sent. So here you have, because this investment fund is top of their group, it is supposed to be a good investment fund, which means that the companies that the fund is invested in should be or should do well. So now after you have these companies, you go to the Bloomberg terminal. If you don't know how to use a Bloomberg terminal, come to us after the meeting, and then you type the company, and this is the first screen that you are going to get. You go to, these are the important ones, the ones that are in red, and then so here you have the PE ratio, the EPS, and this is, which I find quite interesting, are these which Bloomberg analysts think the target price with the current price. So there you have, I mean, kind of a possible profit. But I see this very, very important. If you see here, you have in blue estimate EPS or orange actual EPS, and if you see the bars in all of the last 5 quarters, the company has beat the estimated EPS, which is good, and which makes the stock price of the company go up. Then you have a look at the chart and see if it has good looking, I mean, if it looks good. Then you read a couple of news, for example, RBC boosts price target or on our capital group, and that is the kind of idea that you can bring to the next sector meeting. It could go wrong, of course, but we are not here. I mean, we don't mind about that. We are here to learn, not to see if we become rich or not with fake money. So these companies, which are this, no, what is it? Yeah, these ones are pretty much the same as our capital. I checked that on the Bloomberg terminal. They are doing very well, and we invested in them. Something very important that I did is to put limit orders, which, for example, let's do this. What is a limit order? A limit order is if the price is right now at $46, instead of buying it at the current price, we can tell the platform, I want to wait a bit. I want to buy the shares if the share price touches $44, for example. It might never go down to 44, and the limit order would never be triggered, or it could go down. We enter the market at that cheaper price than the current price. This from 46 to 44 could be 1-2%, but at least for this kind of game, it is that 1 or 2% that we earn in a trade of 100 grand. So it's what, 1,000, 2,000 pounds. So that is pretty much my. It was 7-8 more insurance companies, because I really don't like banks, and Matt knows that since last year. I mean, in my opinion, banks with interest rates so low, they just cannot make money. I mean, the only ones that I would buy if Matt decides are the American ones. I mean, Goldman Sachs, JP Morgan, and all of them. And that's it. So now for your...
So the point Gonz was making there about the limit order thing is that you come up with a company and think, oh, they look good, but I think they're a bit pricey at the minute.
Yes.
I think, oh, if I can get it for this price, then let's do it, and just tell us, and then we can put that limit order in, and then all Gonzalez insurance companies that have limit orders, and they've all been triggered because the prices fell to that point, so we've got it a bit cheaper.
Actually, there are 2 right now.
Yeah, 2 that he's waiting on, I think.
Yes, which is this one and,
so
and another one, but yeah,
yet.
yeah, correct. So let me show you quickly. Probably I put this limit order to buy 150 shares. Maybe when the share price was here, it didn't go that. If you can see here, almost that's that level, but I mean it didn't go that much down. So we now kind of lost that opportunity. It could have been a good trade though.
Yeah.
Anyway, let's carry on. Let's move on.
So I'm just going to whiz through what I did in terms of the ETFs because it's not really that interesting. It's just basically more to make sure that everyone knows what we've done in the sector. So basically, in the last fund meeting, I heard at TMT talking about because basically Harvey was saying we want you to have some more of the capital deployed, and they're like, oh, we might just stick it in some ETFs, get the capital working. Because obviously we had 1.4 million euros just sat doing nothing at the time, and we didn't have any trade ideas. I didn't have any time to really look that much into it. So I thought, right, let's whack in some ETFs. Basically spent like €1 million, put in the ETFs. Wanted to get a range of different things, so get some US exposure, some China exposure, small firm exposure, and then some exposure to the European banks as well. So just quickly, the ones that quickly the ETFs that I invested in. The Vanguard Financials ETF, which is basically just all of your big US banks, if you like. So here's the top 10 holdings. You've got JP Morgan, Bank of America, Berkshire Hathaway, which are also invested in normally as well, Citigroup, American Express, etc. And whenever you look at like an ETF, it'll always have this, like, so if you invested $10,000 in 2010, you'd now have like $32,000 now. That's
Why?
Huh?
Why?
Well, that's just from the ETF growing in size. It's just saying that if you invested it there, and then it grows in size, would have grown in. So if you bought $10,000 worth of shares in this ETF in 2010, it would now be worth $32,000 because the stock market in that particular ETF has gone up by that amount. Yeah.
Okay.
Out of curiosity, do you have one of those for the US market because they're quite US heavy holdings?
Yes, this is a US market.
Which is the good one?
So that's the tracker of Vanguard Financials, but do you have one that says we invested 10,000 in an ETF that tracks the S&P 500?
Oh, you mean to compare the two? I don't have a chart showing that, but I have seen a chart showing that.
What's it like?
Huh?
What's it like?
Better, because obviously the US banks haven't performed as well as markets. Obviously, we have to invest in banks, so there's not really much we can do about that. That's the annoying thing about us being sector specific. Like, I know that some of the sectors are performing so much better. Like, if you look like Tesla went up by like ridiculous percentage the other day. Like, we can never be investing in people like that. So.
But they shorted that, so.
Yeah, exactly.
Shorted Tesla.
Yeah.
Before it went up.
Yeah.
It's crashed back down already though.
Has it?
Yeah.
So another one I did, Invesco S&P Small Cap Financials. So there's a bit of a theory in finance that if you invest in small firms, they have better returns. Obviously not always the case. It's just a theory. And the reason for that is obviously if you've got a firm sort of life cycle, then if you get it at the start, then it grows more.
In my opinion, I would run away from small banks.
Yeah. But I thought, you know what, exposes it to a few different things rather than just being all the big companies. Also, obviously in financials we're allowed to have this real estate exposure as well, so I thought also this is good because it gives us that too. Here's the companies. If I'm honest, I've not heard of any of those companies, but I thought it was fairly good price what we got at the time as well. Right, the big one that's really screwed us a fair bit, but not as bad as it was last week, the China Financials ETF. So we bought it here, like right at the top, and so here's like September last year. We bought all the way up here. Last week when me and Gonzalo met, we sold a bit of it right down here. Now the price has gone up to here, so it's recovered a little bit. Basically, we just sold that there because so some of his insurance companies could be bought, so we just had to cut our losses a bit. But I don't know what's everyone's thoughts on the Chinese market. Like, should we get out, or should we like stick out and hopefully? Because at the minute I think we're minus 13,000 euros in the Chinese market, so we can either get out now and run, or
what do you think, guys?
Or we can try and stick it out.
I don't know. Depends on how the media is handling it.
Yeah.
they're going to keep scaring people who probably should
Yeah.
get out.
Yeah, I mean, I agree. Because the thing is that what we've got to think about in this sector is that that we're ending in 2 months. Like that's when it's the cut. Is that right? 2 months, 8 weeks time. That's like when they decide who the winner is.
Yeah.
In 2 months' time, I can't see it getting any better. I think it's going to get worse. Like personally, I don't know what. What does anyone else think?
Is it primarily down because of coronavirus?
Yeah, 100%. I swear this is the exact reason.
Stumbled upon this thing the other day. It was like really unsourced, but kind of like interesting.
Okay.
It tried to sort of like analyse the sort of peak media of the previous like viral outbreaks. There's a further on the Zika virus as well.
Yeah.
It tracked sort of the stock market at a time, and then in 3 weeks' time,
Yeah.
after the peak, in 3 weeks' time, it's sort of going back in the green.
Really.
3 months' time, after all the peaks, it was significantly back up like it never happened.
Mhm.
So obviously the hard part is, knowing when the sort of media
Yeah. Exactly.
has peaked. But I was thinking maybe it's sort of peaking now.
Yeah. I mean, yeah. It depends, like, because obviously you've seen how quickly it spread through China.
Yeah.
If a few people get it in the UK or whatever, and then it just does the same thing there, then we're well, in terms of the portfolio, we're screwed. Hopefully, we all stay alive. But you don't know.
I think we'll recover actually for like 2 months.
Yeah, exactly. That's what I mean. Yeah, we've got to think. Because I mean, I read something on LinkedIn that was basically, if you look at markets over a 10-year period, they basically always recover. But you always make returns.
Be careful.
Sorry. Yeah. Sorry. You don't always.
Saying that, Matt.
Yeah, but you obviously we're trading over a 2 month period, so you don't know. Maybe we should put it to a vote as to whether we should keep it.
Did any one of you invest in the Japanese Nikkei in the 90s? I don't think it wasn't alive. Because I mean, you would
I wasn't alive.
no, maybe your parents. Because
Wait,
you would.
How old are you?
Eh?
How old are you?
I'm 30.
Okay.
And because you would be now with half of the money that.
Yeah, obviously that was a generalisation by me saying it always recovers. Doesn't always recover, but
Or
in
I mean,
most cases.
in the 2008 bubble, the Spanish IBEX, or
Yeah.
there are still markets there.
Yeah. Obviously, like certain companies don't necessarily recover, but a market as a whole.
The thing is that we have the picture of the American stock markets
Yeah.
and this, and we think that
Yeah.
this is very easy and anyone can make money. And
No. Yeah, I'll move on from this now. We haven't decided what we're doing with that. What are we doing with that? Hands up for keep it, hands down for car losses. So hands up if you reckon we should keep it.
Can I throw an idea out there?
Go on then.
Sure, please.
Do you think it's a good trade? Do you think the underlying theory of why you put a trade on it is still valid?
No.
Got it.
Yeah, I don't think it does. To be fair, I mean,
Because if it's still an underlying good trade, all you've got to do is reduce volatility. All
Yeah.
you've got to do is reduce the risk. So
right.
rather than getting out of the position, it's still the position.
Yeah, because the whole point of this trade in the first place wasn't because of the good constituent companies within it. It was because exposure to the Chinese market, and then now the Chinese market's absolutely screwed. So, I mean, and also I think as well because we want a bit of capital there for us to do a few things if we want to invest in other things. So, if we've got a trade on, yeah, cool. And then this is just the European equivalent of it. The interesting thing about this is that we still have our HSBC short. Rich, did you pitch that?
No.
Who pitched that?
The guy Ben.
Oh, yeah.
Was right now. He's
Okay, yeah. So we've got a short on for HSBC, but then at the same time, this fund is 9% invested in HSBC, which is obviously going long on it. So very contradictory. But yeah, and then I was just picking out as well, like this whole $10,000 thing. I mean, over what's that, a 10-year period as well. I mean, the European banks haven't done very well over the last decade at all.
That's a good example of an investment that doesn't go well in a 10-year period.
Yeah, right. Well, it's still going up a little bit.
I mean, if you pick up Amazon or Apple or...
Yeah, I mean, it's recovered from like down at 6,000 back up to it. But
I mean, this is 1 year, this is a pretty significant drop,
Yeah.
and it's not 2008.
No.
Because I mean, this is 40% down. I mean,
Yeah.
it's a lot.
So yeah. But then again, with this, I'm pretty fine about closing this if someone comes in with a different trade idea, because it's more just if we do have a bit of a market rally, then we're not missing out on it. So I mean, at the minute we're not leading consumer. I think they've got. So we're like say 100,000 up. They're like 120,000 up.
Show it on the screen, Matt.
Okay.
And the thing is that last week Matt and I spoke about keeping
So
2 of the carry on.
sorry, go on. Keeping to the wall.
2 of the ETFs, the 2 that were going, that were doing well, and completely closed down the 2
Yeah.
that were not doing very well. One of them, the Chinese one.
Yeah. So this just sort of to raise a point a bit, like TMT here, they've only got 200,000 invested. They've only made 8,000, but look how well some of their positions have done. Like if they just actually put a bit more money into it, they'd be flying. Like they'd be doing so much better than everybody else. But because they've been so like risk averse with how much money they want to put into these positions, they've not made much at all. Consumer, on the other hand, similar sort of position to us, like 1.55 million euros invested, doing pretty well. Only one of their positions is down, so that's 128,000 profit. Forex, I don't really know like what those guys are actually doing. I mean,
I think that only us and consumer are doing kind of properly good job.
yeah,
I mean, the other two sectors are, I mean, just
yeah. I
are
mean,
doing nothing.
yeah. So I can't really. I don't know.
I mean,
what,
Forex is just ridiculous.
I've never
They
seen
haven't
any
done
position.
anything.
Yeah. And then here's us guys up at this. They're quite a lot invested.
Okay, so can we talk, Matt, about so the 2 ETFs that we want to close down are this one, which is the Chinese one, and which one is the other one? Matt?
The
The
EUFN.
1,000, this
So that,
5,000.
yeah, that's recovered a lot though, because when me and Gonzalo met last week, we were 10,000 down on that.
Okay.
Now it's 1,500 down. So now will possibly be a good time to close that, because, as I said, because that's 200,000 euros there. That just gives us a lot to play with if we want to.
So we have 4 at the minute.
What's that one that's down 16k?
That's the Chinese one.
Yes. And then we have the good one, the Vanguard one.
So this is our US one. This was up like 4,500 today. It's just sort of tailed back a bit. And then this is our small firm one, and I'm still like fairly confident that there's still a decent trade. I like the companies in that.
Okay. I mean, in my opinion, we should definitely keep this with the 300,000
Yeah.
euros. We should close down completely the Chinese one, and I think we should reduce by maybe 100k this one,
Yeah.
and this one. Yes.
Yeah, maybe reduce that to
What do
100
you
as
think,
well.
guys? Let's decide something now.
Get rid of the Chinese.
Okay. Do it now, please.
Okay, so anyone that uses platform, you just drag it over here. Put it on that. Basically. Well, there, to be fair, it's probably just easier. In fact, I think the Chinese market won't. Yeah, it's not open at the minute anyway, so I can't really close it.
Okay.
Either with this one won't be either. Yeah, I can't actually close any of the positions right now,
Okay, yeah, fine.
but we'll sort out tomorrow.
So close down the Chinese one. Then what do you think about the other 3? Should we put more money in the American one? Should we keep it there? How about the other 2? Opinions, ideas?
I don't like the Lloyd's one.
You don't like the Lloyd's trade, which
Yeah,
is that a long? Yes.
Yeah, and I don't know if I'm wrong, but I heard they're going to close down many banks around the UK. Is that true?
Yeah. Okay, so my opinion on Lloyd's is that in terms of shutting down branches, every bank's having to do that. I don't really think it's like that bad of a thing. It's just sort of a cost-cutting measure.
Actually, I think it is good for the share price.
Yeah.
I mean, it's terrible for the people, but
Yeah.
it's unfortunately good for the share price.
Yeah. And like the reason why I think Lloyd's is a good company, like if you look at the price to book value of Lloyd's, I think it's 0.9. but then the average of sort of the big bank, like big US banks or the big other UK banks, I think JP Morgan's is more like 4 or 5 or something, 2. That's basically, we're getting a lot more for our money in terms of the book value, so that's like the value of the assets in Lloyd's. And like, as well, like, I think it's a pretty good price we're getting it for as well. Like, so I mean, when was this? Well, after the election. So we still held this when it was all the way up at like 70. Now it's down at 56. And we've still got a stop loss on it here down at 54 as well, which is obviously getting a little bit close to. So
I mean, that is what the stock market does.
yeah,
You think that this is great, yes, I'm going to earn a lot of money. No, I mean the complete opposite. And the day that you go to the real market, I'm pretty sure, because it has happened to me, that you will eat that, for sure.
yeah.
You don't have stop losses.
Yeah, it's there.
This one's does.
Yes.
A lot.
Is that what the entry price
Huh?
are?
No, the
This is
entry
the
one
entry
is
price.
the one in green.
The white green line, orange line's where we are now. Stop
And
loss.
just so you know, guys, that we've put stop losses 10%. No, is it?
10%.
10% down of the entry point, which is less than 1% of the £2 million, which is good as a risk nation.
Yeah, and I mean some of them though that don't on the platforms for whatever reason doesn't allow stop losses, so we're not able to do that on every single one. But that's just what it is.
Okay, something that I want to add is that we should, in my opinion, short 1 or 2 terrible banks, and there is plenty to choose from. You go to the Spanish market, to the Italian market, plenty of them. What do you think, guys? And probably in the UK as well. But
Well, I would have suggested
I mean,
again back in Lebanon, but it's too volatile.
I don't know,
so-
BBVA, Santander, CaixaBank. I don't know if they are good or bad banks, but their share prices are terrible.
What about any Greek banks?
For example, good idea.
So, it's a big role.
What do you think, guys? Is it a good idea? Or you think, no, this guy is crazy?
It's a sort of thing that for the next meeting maybe you could look into Greek and Spanish banks, see what you think.
Or Italian or...
Yeah.
Yeah.
Yeah, and we're still we're still long on UniCredit here. I think off the top of my
Aren't we shorting the Chinese banks if we're doing
Yes?
yeah, I mean, yeah, I'm not familiar with what Chinese banks there are to short, because I mean a lot of them might not be available to get on Exante because it's pretty limited some of the stuff like that. But yeah, we could do that. Another thing to look into.
UniCredit is doing well.
Yeah,
Let's keep it there.
exactly. Do you want to go on to your? What do you want to do now, Gonzalo? Do you want to?
I think it's going to take me more time.
What's this? What was that? This is Will's presentation, but he's not been to a meeting since he sent it me, so I'm holding it off. Do you want to do this now, Gonzalo? No?
It's going to take me more time.
Okay, do you want to do a quiz?
Yes. What time is it?
1:45.
I think yes.
Time flies when you're talking about
Yes,
investments.
but I think maybe 2, 3, 4 more minutes talking about
Oh, yeah,
something.
yeah.
What do you think?
It's all about anything.
Let's,
That's weird.
yeah, let's do some indices
Okay.
for 2-3 minutes. Okay, so let's see what the markets are doing right now. Look at this. This is December 2018 until here. A pretty big rise. At some point, even the coronavirus thing, I mean, it's been nothing, absolutely nothing. And the markets normally don't do this. They do something like this. I mean, which is more or less what they are doing, but more radically. Because if we go to a big picture of the S&P 500, I mean, look at this. This is very, very easy to make money here. You just need to wait and wait and wait, and that's it, and you are going to make money. So, I mean, there has never been, in my opinion, an easier market than this one. If you compare this with this, the Spanish IBEX, run away from here. Just run away.
Then obviously you can argue that it's just a bubble, like just keeps going up and up and up, and sooner or later it's going to crash.
And the thing is that this rise is even steeper than this one.
Yeah.
That then came the December 2018 drop. So this has to, I don't remember how you draw things here.
But obviously normally if you're investing like long term, you've got to think about the potential.
This has to come back to this area.
Yeah.
At least. And I spoke to a guy last year. This gap here, in my opinion, in the S&P 500, which in my opinion, all the gaps in the S&P 500 are close. Not in other markets, but in the S&P 500, yes. In my opinion, at some point, this will have to be closed. So the market will come to this area. It will be because of the coronavirus too, because Trump loses the elections, because of something. And then something very important is the MACD, which you can see here. I'm going to put the Nasdaq one, which is even more striking. We were, maybe a week ago, 2 weeks ago, at this... the MACD is kind of how overbought or oversold the index is. Last week or 2 weeks ago, we were at 170. Can you see this? The 2000 bubble? I mean, it was even higher in here. But this is definitely a point not to buy any more stocks, even though Tesla can go up 500% or whatever. So, I mean, now is definitely, in my opinion, not a moment to invest any money. I hope, I will try to convince Matt to start with my real account next week or in 2 weeks' time. And yeah, because I haven't bought anything with real money since June, July last year, because, I mean, if you buy something, you have plenty of chances that you are not going to make money or you are going to lose money. So
I think
there
the
we
next
go.
meeting will probably miss out the talking about the macro update and the financials coming, so Gonzo has time to go through his...
Or do it quite quickly.
Yeah, just get through it quickly.
So it's 10 to 7. Let's do the quiz, guys. Grab your phones.
What we've all been waiting for.
This is, actually I've got it here. I think it's pretty good, in my opinion. Play. Classic, I think it is, no? Yes, can we make this big? Oh, we have music. Okay, so go to kahoot.it and you will see enter your PIN or something like that. So put that PIN and this will take more or less 10 minutes. You have there some sweets if you win. And will be done in 10 minutes. How many are we? 3, 6, 9, 10. This is fine. It's not. Is it F12? Oh, no, what am I doing? I don't know how to make this bigger. Okay. Yeah?
Yes. 6.
Who's not there?
I'm not there because they have 5% ladder rate.
Oh.
Probably gonna die.
What's
Sure. Yeah, fine. Is everyone else on it? You on it? On it? On it? Cool. Elated Panther 92.
I wrote GCA, motherfucker, and changed it.
Okay, so yeah, we're done.
Nice. Cool. Should we go?
No. Oh yeah,
Oh.
10.
10?
I mean, if you have been in the market maybe for the past month or so, you should guess it. If not, then
Decent.
guys.
Half for you. Not bad.
Sam, good. Always on
Sam's
top.
always on top.
Music is quite relaxing.
Yeah. Got a good beat to it. Ooh. Who's on top? Oh, yeah. Horses.
None of you guys have got the first two.
I know.
That was 7 to 10. Another interesting thing about the Chinese markets is that in China they extended like Chinese New Year by a week to try and stop the spread of coronavirus, and basically that's obviously meant that factories aren't producing as much. So even for a lot of UK companies that are buying in Chinese product, like Chinese goods, they're sort of struggling, not got enough supplies to keep them going. It's not really anything to do with financials, just thought it was interesting. Will.
Well done, Will. This is true or false? Eurostox 50. The 50 biggest European companies. The biggest market cap. What do you think, Matt?
I possibly couldn't give it away because I don't know the answer. Wow. Split down the middle. Will steaming ahead. True or false again?
This is the last true or false question. There are 10 in total. In this case, the biggest, the largest market cap companies.
For you. Oh, well, Dennis is on a streak.
I mean, plenty of banks in the Eurostox 50.
What's my name for stuff?
It's because I just hovered over it. What happens if I click on Dennis? Oh. Why do these people
No,
go?
don't get
What
me
happens? What does that do?
Just kick us out, yeah.
Does that kick you out of the game?
Yeah.
Really?
Oh, sorry.
Oh!
I wonder what it did. So, can you type in the pin again and does it work?
I don't think.
Oh, I'm sorry.
No, don't worry, don't worry.
I'm sorry. You weren't winning anyway, Will's winning. So. Oh, shit.
First of January 2019, which is not kind of its biggest rise, because it went down from January to April, May, and then it's when it started to make
200%.
the 500. But no, from
I'm really
January
sorry
to
for
100.
kicking people out. I didn't know that's what it did.
Just so striking. Unbelievable how strong the markets are.
3.65.
Nothing, absolutely nothing for such an important event. Last month, be careful with that detail. It's very important. Matt, what do you think?
I'm regretting it.
I think I know the answer.
Hey, two of them have reached it.
So,
I thought Microsoft reached it.
so this is that they reached it last month. To my knowledge, Amazon reached it last year, but now
Correct.
they've gone down. Microsoft is still above trillion and they've stayed there. Is that right? And Apple is still above $1 trillion. Saudi Aramco above $1 trillion. They IPO'd in, was it December or?
Did Microsoft reach recently as well?
Yeah.
I think they reached.
Yes, Saudi Aramco in
Both
December,
Alphabet
2
and
months ago.
Microsoft reached $1 trillion.
Yeah, but not last month. They were already at $1 trillion. I don't think
Yes,
they reached
yeah,
it last
correct.
month.
Correct.
I'm pretty sure they reached $1 trillion last
Amazon and
year.
Microsoft last year, and Saudi Aramco December last year,
Yeah.
something like that. And Alphabet in
I think
January.
it's basically Alphabet got to the $1 trillion mark because their co-founders resigned. So then cause basically like I'm trying to think what actually happened. So Apple do a lot of things like just because shareholders like them, like they do things to make shareholders happy. Whereas Google, Alphabet, they're doing a lot of things which weren't really making shareholders that happy because it was run by the co-founders. So then when they went, the markets were like, oh right, so now they'll start doing things that shareholders actually want. So then the share price went up. That's my knowledge. Anyone got anything to say? Cool. I probably could guess that. But ooh, sounds-
Difficult answer. I mean, that number was everywhere in the financial news recently.
17.5%. It's a lot, isn't it?
Yes. Worryingly high.
Last question.
I just didn't
My
know.
slides did say this.
Actually, I don't remember what this one was true or false.
So, what is an active investment?
Anyone?
So you change it based on what's happening. You can, you'll be like, coming in and out of the market. ETFs, you sort of leave it, you recover.
Yeah, well no, because you can have an active ETF, I think.
I think
But-
yes, but
yeah.
forget about that.
So what's the opposite of active? Yeah.
Okay. And
So-
anyone passive investments?
So passive. So passive is just like you're tracking the market. So that's like our Vanguard Financials ETF is trying to just track the market, whereas active investments is like you're trying to beat the market. So that's like Berkshire
Yeah.
Hathaway. They're,
So, for example, if you want just to buy the FTSE 100
yeah.
and pay, in my opinion, which is the important thing, and pay less commission to the broker, you go for an ETF. If you want to beat the market, so if the FTSE 100 makes 10% in 1 year, and you want to Sam, well done.
Sorry again for kicking people out. Won't happen again.
So yes, an active investment tries to beat the market or the index, but you are paying kind of a premium to the asset manager. That's it. Thank you for coming, guys.
Fun meeting next Tuesday.
Yes.
Ask Harrison any questions you want.
Yes.